It's not about picking stocks. It's about picking the right portfolio. A big catalyst on Thursday for bond yields to go to 5.06 on the 10-year, which is currently the top end of the range, which is the GDP number. So again, don't forget where we're at on this. This thing right here, you know, this is hawkish. See this Hedgeye estimate? So a client asked me this morning, he said, you know, well, what do you mean you think GDP could be 3.12%? I said, and you're bearish. I said, yeah, that's part of the reason why we've been bearish on bonds and related rate-sensitive equities, because that's our nowcast. And then you get, you know, what you really hear me saying is what the market's saying about the quarters that we're actually either in, which is the fourth quarter, or going towards, which is Q1 and Q2. But that doesn't change the fact that this is a catalyst that will be reported on Thursday for macro monkeys and tourists alike. So if you're sitting there looking at like again, the Fed believes they have a 2 to 3% GDP economy with full employment. Okay, and so does the bond market. You know, when it comes to on that day, that's going to read that number as hawkish. Now we don't have to have a crazy, you know, hawkish number like the Atlanta Fed numbers actually come down, but that's a real important thing. Friday, if I were to pick a day, you know, if this stock market, which people got long for seasonal veggie reasons in October, were to find its final smackdown into the end of this month, wouldn't that be interesting, Jonesy? Right? Yep. I mean, going into a Friday, the last two Fridays have not been kind to people, where it's coming off a very hawkish GDP report. And again, then you're also going to be getting more earnings reports. Like I can't tell you enough times that the NASDAQ currently, you know, there are 100 companies in the NASDAQ 100. Look at the earnings growth rate. This is nowhere near, not even on the right planet or orbit as like the Stephanie Link type view of, oh, earnings are going to be great. Yeah. The aggregate earnings decline. And again, this is with Elon telling you it's going to be a bad quarter. Down 17.7%. And
then I guess we have expectations for earnings, which are quite high for next year.
Really high.
So we have a challenge there where, you know, it's never good for the market when earnings estimates have to continually come lower and lower. Mm-hmm. It's going to be a potentially negative catalyst heading into next year.
Well, these earnings are going to go down like heart attack lower.
Yeah.
And they already did, actually. And that's why we've had Stagtember became Shocktober, brought to you by the one and only Christian Drake on our macro team. And that's all I have to say about that. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.